Good morning, students. Today, we are going to understand one of the most important subject relating to business. This is the accounting. Why should we study this particular accounting? And what is the importance of it? How to post the entries in the accounts? This is what we are going to understand today. In any business, typically, we are going to have different kinds of transactions. Some are related to non-financial transactions. Some are related to financial transactions. We do not we worry about both the transactions. But this particular subject deals with various financial transactions. Unless until we understand and properly record the financial transactions, we will not be able to understand how we are performing in any business. That is one of the reasons why we need to study this accounting. So basically, why should we study this particular accounting? By knowing the accounting, we will be able to understand how much we have invested in a business, what assets we have purchased for a business, how much raw materials we have purchased in a certain period, how much we have spent towards various expenses in a specified period, what revenues we have received in a particular period, how much money we owe to outsiders, how much money we should get from outsiders, what were the cash inflows and what were the cash outflows during a particular accounting period, how much profit we have received in a year, how much profit we have distributed to shareholders. This is what we usually understand by studying this particular accounting. Accounting is is all related to various financial transactions. Accounting is an art. It's not a science, and it's a language of business, which every businessman should understand at least to a certain extent. Without understanding this accounting, it will be very difficult for a businessman to understand and analyze how his business is performing. To understand much more relating to accounting, let us take one of the important definition which is being often quoted to understand what this particular accounting is all about. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof. To repeat, accounting is the art is the art of recording, classifying, summarizing in a significant manner and in terms of money, the transactions and events which are part of at least of financial character and interpreting the results of it. So basically, it is to record a transaction. It is relating to the classifying different kinds of transactions, then summarizing these particular transactions so that we'll be able to understand and interpret the results of various financial transactions which becomes part of any business. Any business definitely looks for money, and it is all related to money only. And unless until we understand where from the money is coming, where the money is going, we will not be able to analyze properly and decide the future course of action. That is reason the accounting is most important for any businessman. Then the question is how to record business transactions in accounting books. As I said, it's an art. We need to learn this particular art. It's a methodology which we need to understand. Otherwise, each individual will be putting the transactions in a different manner so nobody will be able to understand what you are writing in the books of accounts. That is reason actually we have fixed up a particular methodology which everybody can understand and interpret these particular results of any business. This particular accounting over a period has evolved, and two different accounting systems have evolved over a period of time. Firstly, the single entry bookkeeping system came into operation, existence. The single entry bookkeeping system came in where the business started maintaining cash accounts to understand how much cash they received and how much cash they paid to others for different reasons, apart from maintaining personal accounts to understand how much they need to collect from others. So this particular accounting system never bothered about writing entries relating to what they have purchased, what they have sold, but they have only recording the cash transactions and the transactions relating to the credit sales and the credit purchase. Not more than that, they are recording. They are not recording the transactions relating to the assets, expenses, the losses, or the incomes and the gains. So it is not considered to be a proper accounting system which gives you proper picture relating to the various financial transactions. That is reason over a period this single entry bookkeeping system has gone into oblivion and double entry bookkeeping system has come into operation. What is this particular double entry bookkeeping system? The double entry bookkeeping system, if you wanted to understand, it is better that we go through a particular example. In any trading or manufacturing organization, we purchase raw material or goods to sell them. We purchase on cash or we purchase on credit from some other part, sell goods on cash or sell goods on credit. We may make payments to the others. We receive payments from others. We make payment. We pay wages. We pay salaries. We pay rent. We pay taxes, etc. to the various individuals. In all these particular transactions, one need to understand that typically there is one giving aspect and one receiving aspect. One giving aspect, one receiving aspect. If you are purchasing the asset, we are getting one asset. We are losing one asset. If You are selling on credit actually. We are losing something and we are getting, or we have a chance of recovering some money from some other party. So there is always going to be, for every financial transactions which you are going to see in an accounting, there will be one giving aspect and one receiving aspect. So this particular giving aspect and receiving aspect is the crux of this particular W3 bookkeeping system, where it has led to what is called a dual entity concept, wherein the concept of debit and credit has come in to regard the various kinds of transactions. The dual aspect has brought in W3 bookkeeping system. For each transaction, two entries are made, one forming a debit, one forming a credit in one or more accounts. To repeat, this double entry bookkeeping system is based on the dual aspect concept. In every business, we have various transactions. In simple, every debit has corresponding credit, every credit has a corresponding debit with equal amount. Let me repeat, in double entry bookkeeping system, for every debit, we have equal credit and every credit has corresponding debit with equal amount. This principle is applied to ensure satisfaction of the accounting equation, that is, equity plus liabilities is equal to assets. Let's understand much more relating to what is debit and credit. The idea of the debit and the credit is a prime theme behind the double entry bookkeeping system. Many ask in the interviews, what is this particular debit and what is this credit? Debit in simple is the left hand side of the account. Debit in simple is the left hand side of the account, and credit is the right hand side of the account. Debit is left hand side of the account, credit is the right hand side of the account. Then comes the question, what is this accounting? Accounting is a summary statement which tracks a particular type of financial transaction relating to a specific person, a specific asset, or a specific expense, or a specific loss, a specific revenue, or a specific gain. An account in specific will give summary of a person, asset, expense, a loss, or a gain, or a revenue. So when you look at any account, it will give you some idea about a particular asset. When did you buy this particular asset? For how much you have bought this particular asset? What is the value of this particular present value of this particular asset after the depreciation? When you go and look at a particular person's account, we'll be able to understand whether he owes us or we owe him some money. When it comes to salary account or When it comes to some other expenditure account, we'll be understand how much has been spent relating to salaries or wages or power, rent, etc. There are certain other incomes like interest income. When you look at this particular account, we'll be knowing about how much we have to receive. Rent may be rent receivable or rent payable. So there are going to be rent receivable account, payable account. So we'll be able to understand the summary of a particular account if you see the account. Account is looks like this. A T looks like T, wherein there will be debit, there will be credit. This side is called debit side of the account. This side is going to be called as credit side of the account. We'll discuss about this particular account at a later part to understand much more relating to this account. So, after understanding that every transaction has to be put into an account, we need to understand how many types of accounts we have. In general, all the accounts are classified into three types of accounts. They are called personal accounts, real accounts, and nominal accounts. What are they? They are personal accounts, real accounts, and nominal accounts. We need to understand what these particular accounts are. The personal accounts deals with individuals. Individuals may be human beings or artificial persons. Individuals may be human beings or artificial persons. And individuals are of three types. Persons representing natural persons like Ram account, Obama account, etc. We have artificial persons representing partnership partnership firms, associations, and companies. For example, we have Ram and Krishna account, Krishna Sons, ABC Limited, ABC Industries Limited, Tata Instance Limited, etc. These are called artificial persons. We have something called representative persons. Representative persons represents person or group of persons like salary payable account, prepaid expenses account, and outstanding salary account. These are called representative persons accounts for the reason that this particular salaries or wages belong to certain individuals. We need to pay salaries. To whom you are going to pay the salaries? To certain individuals. We'll be understanding much more we are going about these particular accounts when we go to the final accounts, wherein at the end of the year we'll try to understand how much money we owe to others or how much others owe us, how much money we have to receive from others and how much money we have to pay others. So while closing this particular accounts at the end of the period, we have to note this particular outstanding accounts and we have to pay to a group of individuals. These outstandings or amounts usually are put into the representative person's accounts. Then we have discussed something about personal accounts. Just like this, the other type of accounts are real accounts. What are these particular real accounts? Real accounts represents all assets belongs to business enterprise. Real accounts deals with assets of the organization. Any asset which is tangible and also intangible. A building account, furniture account, patent account, goodwill account. Some are tangible, some are intangible. These real accounts are divided into tangible real accounts and intangible real accounts. Tangible real accounts include assets that have physical existence, like building account, inventory account, furniture account, and investment in a particular physical asset. Then we have intangible real accounts, which does not have any physical existence. Trademark account, patents account, goodwill account, copyright account, etc. This is relating to real accounts. Another kind of account is nominal account. Nominal account is an account which represents expenses, losses, gains, and revenues. What it is? A nominal account represents the expenses, losses, gains, and revenues of any business. Nominal account may relate to wages, salaries, rents, electricity expenditures, traveling expenditures, commission expenditures, to be received or to be paid. This belongs to what is called nominal account. So these are the three kinds of assets accounts we have. One is personal account, other one is real account, other one is nominal account. Let me repeat. There are going to be personal accounts representing individuals. Real account deals with assets of the organization. Then nominal account relates to the expenses, losses, gains, and the revenues. Thank you. We'll look at this, how to post a transactions in these particular accounts in the next class. Thank you.